Cool. All right, this is our agenda. Today we're starting our normal meeting, so we're going to have our market outlook come in, our chief economist, and then our M&A director kind of give you small presentations about their position, what is going on in the stock market, what's going on in the economy, maybe the fundamentals about teaching you the basics before we get into the very a little bit in-depth stuff. So then we have the sweet spot, Professor Sweet. So does anyone have any outperforming moments to share that they had maybe this past week from our last meeting?
Market related or just life moments?
Life moments. It can be, if you made money in the stock market, maybe that's an outperforming moment, but
I'm currently first place in the market competition.
there you go. There you go. Any more? Yeah. That's a great question. Cool. Our next is the quote of the day. It's by Jim Rohn. Formal education will make you a living. Self-education will make you a fortune. Now, it's a reminder that what you learn in class will only get you so far. You guys have to go out of your way to learn, to research things on the side, and get ahead of the competition, right? Because if you're just doing what everyone else is doing, you're average. You got to go above and beyond and outperform. So it's a great quote. All right, we'll get started with market outlook today.
Hello guys, how's everybody doing today? Today I'm going to talk about the fundamentals of the stock market, the types of stocks, stock correlations, and the S&P 500. Let's go to the next slide, which is fundamentals. So I have a question I want you guys to ask yourself. What drives the markets, right? On the short term, what drives the markets? And on the long term, what drives the markets? So on the short term, it's investor sentiment, right? So investors are thinking, oh, maybe this stock is going to go down. This stock's going to go up because of interest rates are low or interest rates are high. There's political events. And well, on the long term, they're looking at financials, the financial statements, balance sheets, free cash flows. They're looking at revenues growing in the 10 years or the past 5 years, right? And they don't want expenses to be more than the revenues. So now, free cash flow, right? So how do you get to free cash flow? It's the profit after tax and capital expenditures. They're also looking at free cash flow is growing, and they're looking at the current interest rates because the current interest rates affect the companies and the buying power of them. Another important factor that many forget is the manager's history. So they're like, okay, what company did this CEO direct or manage? How did he do it? His reputation as well, right? And a PE ratio that's been stabilized for the past 3 years is also good. Companies that give out dividends, right? They pay their investors for the past 10 or 40 years, like Coca-Cola. So now we have the markets, the S&P 500 that tracks the top 500 companies of America. And the NASDAQ tracks 100 companies, and the Dow Jones, the Russell 2000 tracks the small companies in the economy. It's a really important one, in my opinion. So for those that don't know what the bull market is, a bull market is when investors are thinking that the stock is going to go up because the economy is doing great, right? And the bear market is like, okay, let's bet that the economy is going to go down. So all the stocks are falling, just like it happened in 2021 to 2022 because of the interest rates went up. So, and political events. Political events like the war on Ukraine can affect the prices of gasoline and prices of food because those countries control the gasoline and food sometimes. Let's go to the next slide, which is the types of stocks. And we have defensive stocks here. So the defensive stocks are essential products that they're always going to be using no matter the economy. So if the economy is bad, right, they're still gonna be needing healthcare. They're gonna be needing canned food, like Campbell soups and blue chip stocks. So blue chip stocks are stocks that have been around for 70, 50 years. The safest stocks in the stock market, like Coca-Cola. And then we have income stocks that pay their shareholders in the forms of dividends. So how do they get their dividends? They get it with the free cash flow. And they get the dividends and pay the investors and incentivize them to invest in their company. And now we have the growth stocks. The growth stocks are Tesla, Apple, Amazon, and their rapid expansion and high in technology, innovation, right? So now we have the cyclical stocks, which are very volatile and tend to follow trends. So like when the economy is doing great, you're spending money, you're going to hotels, you're getting airplane tickets and going on cruises. You don't care about anything else, right? You're getting all the expensive stuff. And let's talk a little bit about diversifying stock correlations. So it depends on the market conditions, right? Because a lot of people think, okay, let's get 10 stocks and we're diversified already. But it's not like that. There's 11 sectors in the S&P 500. As you can see here, 11 sectors: technology, materials, real estate, energies. You can see it here. And then you can also diversify in the commodities, real estate, oil, and gas, bonds. So stocks is not the only way to diversify, because if you diversify only with stocks, you can see that sometimes the heat map is all red. So you're down, your portfolio's down, everything's down. So if you invest in commodities, real estate, bonds, now you have something to hedge against the stocks that are going down. So let's go to the next slide. And we're going to be talking about the S&P 500 that closed on Tuesday. So this is a very important day. Yesterday was very important because the S&P 500 was down, but the energy sector was up 1.5. So why is this? And that's because the Saudi Arabian government decided to cut down 1 million barrels per day, right, of oil. So what does that do? If you remember in 2022, Biden agreed to use the strategic petroleum reserve, and now it's at its lowest since 40 years, as you can see here. That's where we're at right now. And then the gas prices went down. The strategic petroleum reserve also went down when they released the reserve gas prices. When they released the reserves into the gasoline of the economy, well, this caused the gas prices to come down, but also the strategic petroleum reserve to come down. And then what happened afterwards, we used the gas that we released, is that we still have the strategic petroleum reserve empty, right? So now we have to fill it up. And they were saying, we're going to fill it up when it goes down. But the Saudi Arabian government isn't letting it go down, right? And it's not going to happen. Okay, so we talked about the fundamentals, types of stocks, the S&P 500, and diversifying stock correlations. Feel free to connect with me on LinkedIn. I'm going to pass the microphone to our chief economist, Waylon. Thank you.
All righty, everybody. Hope you guys are having a great week. So let's get right into the economic perspective. I have my plan here. We're first going to talk about what monetary policy is. Then we're going to explain what the federal funds rate is. And then we're going to talk about the inflation reports, primarily the CPI, talk about the jobs report, and then just kind of give a future outlook, primarily in the eyes of the Fed. So first, expansionary monetary policy. It's just simply when the money supply and when the Fed decides that they want to increase the money supply. So they're going to decrease interest rates. So basically the way interest rates work for the Fed decides, okay, how much money will JP Morgan, the bank, be able to get loans, which it can then loan out to you. So say you want a mortgage. Well, JP Morgan has to store most of its money with the Fed and the reserves. So then the Fed knows that they're not going to go out of business 2008 style. So essentially, the Fed's like, you can get this at 2%, or you can get it at 1%. So if they want the economy to start getting boosted up, because the Federal Reserve has a dual mandate where it wants, on one side, it wants high employment, sorry, and it wants low inflation, not zero inflation. It wants steady 2% inflation. Just that is its goal. It has a dual mandate. So both of those are equally important in the eyes of the Fed. So if, say, currently, like whenever 2020 happened and no one was spending any money and inflation dropped down like a rock because no one wanted to spend their money on anything, so prices had to go down. But at the same time, we had super high unemployment because everyone thought that everywhere was going to shut down, and so a lot of people lost their jobs. The Fed decided to do expansionary monetary policy. But then on the other end of that, you have contractionary monetary policy, which essentially is the other way around. Super high inflation, but the economy is doing very well. So the Fed basically decides, let's put on the brakes, increase the rates. So then, it costs more to get a mortgage. So people spend less money. And so the inflation goes down. To kind of give an example of that, we have the interest rates for a 30-year fixed home loan kind of in January of 2021, right before they started implementing any rate hikes or contractionary monetary policy. And then we have today. So it's the same home, it's $300,000, but it's going to cost you roughly another $1,000 because the interest rate is just so much higher for these mortgages. So then, people have less money in their bank account because a lot of people live paycheck to paycheck. So they either had to spend less money or make more money, but all of that is going towards the home and less of it is going to other things. So hopefully the Gucci bags cost less money or stop costing more money at like 9% inflation. So that's a brief explanation of expansionary and contractionary policy. And then, well, it is out of this the area there, but essentially that is the FOMC federal funds rate, which is the money that the banks can loan out. We're currently at 5.25% or 5%. Now I showed you the 8% for the home loan earlier, but that was because this is how much money the banks get to loan money from the Federal Reserve or other banks at, and then they have to charge interest on top of that. So they increased it in July by 25 basis points, which is just 0.25. So before that, it would be 5 to 0.25 instead of now it's 5.25 to 5.5. And it's the 11th rate hike in 17 months since they started. So you can see here the federal funds chart. So like in 2000, like up into the 2008 period, they were doing contractionary monetary policy because the economy was just running so hot. People were buying way too many homes. Inflation was running up. And so they started doing that. Then everything broke. And so, super unemployment. And so they just shot it right back down. And then kind of the same thing happened leading up to 2020 and COVID. So next time I'm going to actually know that bring it down a little. But we are talking about the CPI report, which is the inflation report. So month to month in July, it rose, but it was less than expected. Not for the month to month, it was expected to be 2.2%, and it was or 0.2%. But core CPI, which is different. So CPI, the headline inflation, is essentially how much all of the products for consumers went up. Core CPI would be the same thing, but without energy and food prices, because those can go up and down really, really rapidly. And so core CPI is seen as more of like sticky inflation. So if you have super high core inflation, that's really bad because then the Fed's like, this is not going to go down anytime soon. So you have CPI, which went from 3% to 3.2%. versus the 3.3% expected. And then core CPI, which actually went down from 4.8% to 4.7% versus the 4.8% expected. You can see our chart there for both the core and headline inflation. So we had our super high peaks towards the middle part of 2022, and we've kind of come down a little since then. But as you can see, core inflation has only come down a small amount compared to headline inflation, mostly because we had energy prices shoot up, especially due to the Ukraine war and having a lot of oil coming out of Russia be considered illegal. So let's drill down into the report some more. It's the first time inflation increased in a little over a year from its peak in June of 2022 at 9.1% headline inflation. Fuel increased 3% month to month, but it was still down the negative 26.5% over the year, which kind of shows from what Raul was showing with the strategic reserve that we implemented. So we kind of, besides things kind of evening out after the whole Russia-Ukraine war, we also implemented the strategic reserve to try and lower prices. But it's coming back up now. And so non-energy services and shelter also increased 0.4% and 6.1% and 0.7% respectively year to year. But used car prices, which if you guys know, used car prices were just super expensive during COVID, actually have been decreasing. It's a negative 1.3% month to month for July and negative 5.6% for the year. And so we're going to talk about the jobs report. You can see total unemployment and unemployment rate both increased. Does anyone think that sounds a bit paradoxical and not possible? Raise hands. No? Yes?
My class knows.
Yes. Sweet's class knows.
I don't know why. It's confusing.
It is confusing. Yes. Okay. So 187,000 people of non-farm payroll was added, which means 187,000 people received a job and started getting employed compared to the 170,000 expected. So that's the total unemployment part that went up. Now, to keep in mind, the last however many months in a row, they keep getting revised down. So we shall see in the future if that's actually the numbers. But also unemployment rate increased from 3.8% to 3.5%. Oh, yes, you're right. This is totally supposed to be flipped, 3.5% to 3.8%. It increased. So some people were let go of their job, and labor participation rate also increased, which is how you got the paradoxical unemployment or total employment going up and unemployment rate increasing, because more people came into the job force. So you had a bigger pie, but also employers were able to take more from the pie. So overall, you're left with more people in the job force because people graduated or people came out of retirement, or people that were like cyclically or not cyclically unemployed for a really long time and just kind of were done being employed, came back to the job market. So you had 597,000 people re-enter the labor force. So the percentage for unemployment rate went up, but also more people got jobs overall in total of just like however many millions of people of the United States have a job. So there's your unemployment rate percentages and your non-farm payroll employment. Okay, so we're talking about what the Fed is looking at going forward. So the Federal Reserve, as it has seen all these reports come out, it has to decide, are we going to increase rates or are we going to lower rates? And like I was saying, it's kind of like they're driving the United States as a car, and they can either step on the gas or they can step on the brakes or they can do nothing. And so they are going to have their next meeting on the 20th of this month. And so it's perceived that they probably will do nothing this upcoming meeting, but they'll probably talk about their next meeting in November, which there's still a chance that they might decide to increase rates which would then again cause people to have a higher mortgage payment and have less money so they can buy less Gucci bags. So you have Mr. Fed Chairman Jerome Powell, and like this is his route forward. He can either have too tight monetary policy and we can have the Great Depression, or maybe something a little bit less, but also a lot of people without jobs. Or he can have too loose monetary policy and we can have $50 billion bills like Zimbabwe there. Or what he's trying to do, this like little golden blue strip of sunlight in between, he's calling a soft landing, which is where we kind of go in between these two things. And we have still pretty strong economy, but low inflation. Or, we might end up with both of these options, Great Depression and super high inflation. It's really to be decided, and to figure out which way he turns at the next meeting, you should read the report on September 20th, because this is only 10 minutes and it's a really complicated economic problem. And I can only explain it so good before it becomes an hour-long lecture. So up next, we have Sebastian. Feel free to connect with me on LinkedIn. We have Sebastian from Mergers and Acquisitions.
How y'all doing today? All right, so first things we're going to be covering, which is we're going to cover what is M&A, the types of integration, deal volume, the changing landscape, and the risks and rewards of mergers and acquisition. So what is M&A? So M&A, the phrase M&A, it's an umbrella term that refers to two companies coming together and like forming a new entity, right? So the key distinction between a merger and an acquisition is a merger, it's typically two firms that are like in the same industry, same market, usually rivals. They come together, they join their operations to form a new entity. And we have acquisitions. It's usually firms will go or even an individual will go and they'll buy 50% of a publicly traded company, and they'll acquire them. However, there is a exception to that where we have privately traded companies. Does anybody know what the name of that is when we go and we buy privately traded companies? Exactly, private equity. So if you see here, we have 1, 2, 3, 4, 5, 6, 7 types of integration, but for our purposes, we'll be covering 3. So the first one we have a horizontal merger. So as I said in the previous slide, a horizontal merger is two companies getting together, usually in the same industry, combining their operations, and they're like getting more of the market share. Now, the reason there's usually 4 common types, which is cogeneric. That's the one that isn't on here. The reason I left it out is because the key distinction between a cogeneric merger and a horizontal merger is that in a cogeneric merger, they're in the same industry, but they have different products and services. So say you're still in the tech industry and you have a tech company that focuses on producing, manufacturing phones, that kind of stuff. And then you have another company that focuses on, say, maybe like the software of it. They come together and they just combine their operations. And we have vertical mergers. So in the vertical mergers, it deals with companies that are at different levels of a supply chain. It's like, I know, anybody remember the supply chain, maybe like from their accounting class, economics, So let's say in the case, we have a textile factory or a textile firm, that produces like cloths, anything cloth and stuff like that. And they're like, I want to reduce my costs. Like it's we're spending like we could reduce the cost of getting our cotton. And they say, let me go ahead and like give an offer to this cotton manufacturer. So that's all it is. And like, say for the example I have right here, eBay and PayPal. So, eBay, they focus on facilitating deals, but in the supply chain aspect, they would acquire PayPal, so they wouldn't have to be dealing with, Apple Pay, stuff like that, like basically making it easier for their customers to pay. So for a conglomerate merger, that's just two companies that have nothing to do with each other in terms of product or industry. So let's just say like Amazon and Whole Foods, people will be like, why is a delivery service purchasing a grocery store? That's weird. So we have the pure firms that have nothing to do, they have nothing in common. And we also have the mixed firms who are like, they're just trying to extend their products. Now we have the changing landscape. So I want you to keep in mind, I'm not like dismissing that, obviously the economy is always changing, new events are coming out. But for mergers and acquisitions, one thing that I really want you to focus on is the firm's focus has shifted from focusing on legal aspects of deals to ensuring due diligence. Now, I know they're kind of like the same thing, due diligence, legal firms, but what that means is now companies go under the assumption that they're going to have to go over some hurdles in legal aspects, and now they just proceed as it's like, yeah, we're going to have difficulties with that. But now they're like, okay, how safe is this company? We want to make sure there's no fraudulent activity going on behind the scenes. How long is this firm going to last in the industry? And we also have the private equity firms where if we go and we buy 50% of privately traded firm. And the reason I know everyone's wondering why I have Warren Buffett up here, famous investor guy. The reason I put him up there is he has a really funny way of describing private equity. He tells a story about there's a guy with a horse, and he says, oh, I have this beautiful horse. He's strong, he's fast, he keeps winning races, but every now and then he goes crazy, he starts wrecking stuff, and he asks the vet, what do I do? And he tells him, well, the next time your horse is behaving, sell him. And he says, that's what private equity is, which is kind of funny, since considering he has an issue with the firms, but, kind of dabbles in it himself. Now, for the deal volume, if you notice right here, anybody know what happened here? COVID, exactly. Yeah, so after COVID, we saw a little spike in the volume of deals that were happening. For controlling stake M&A transactions, that's just private equity transactions. It's or not private equity, it's when an owner or a company has 50% of the shares of that company, so they kind of have the control of that company. And right now we don't have I couldn't find a graph with the third quarter, but we're actually down from the previous quarter. And I'm sure in October we'll get a graph out there, show you guys how we're doing. Now the risks and rewards. So the risks, it's inadequate due diligence, information asymmetry. The firm that's trying to buy is obviously going to have less information than the firm that's trying to get bought. So they have the misrepresentation of financials, fraudulent activities. So let's say you're buying, let's say an energy company that has come out with a new way of recognizing revenue. Does that sound familiar? Enron. Anyways, we also have the rewards. So it's just new products and channels. So we have in the case of conglomerate mergers, they get to extend the products and services that they provide to their customers. So Amazon now gets to provide fresh food. They have that fresh food aspect where people can order their groceries through Amazon. And it also removes the competition. So in the case of a horizontal merger, you have them they just absorb their rival, right? Or they just join forces with their rival. So now they have less competition to deal with. And we have this increased supply chain sufficient efficiencies. So, less costs in case of having to negotiate with other firms like your suppliers, and then economies of scale. So in the case of economies of scale, it's just the increase of profit that you see from increased activity. And that's about it. If you guys have any other questions, connect with me on LinkedIn. That's a video.
All right, how y'all doing? Not well. All right. All right. So I'm not gonna do my normal sweet spot tonight because we need to talk about the classes, but if any of y'all are interested in my reading list, you can email me. If I can type, it's hard to type with a microphone in your hand. That's my email. Mahler, you know what Mahler is, right? Greatest composer who's ever lived in the history of the world. So Gustav Mahler, so Mahler 6. So if you have podcasts or books you recommend, send them to me. I have my lists some of y'all know my favorite podcast. Some of y'all know what it is because you had me last semester, but there's some podcasts you should be listening to every week. Business Breakdowns is one I love, but there's some others that are really, really good. There's some really good books. I just finished the book by Henry Kissinger on AI. Not a great book, but he's 100 and something years old, so give him a break. But scary chapter on AI and the military, really scary chapter. You start handing over nuclear buttons to AI computers. It's kind of a scary chapter, but if y'all see books you like, I have some of my favorites out there, so definitely email me. But I want to talk about our classes. So Alex showed a quote at the beginning about the importance of learning how to teach yourself. So the world has changed quite dramatically. When I was in college, it was pretty easy. You just did what your professor told you. If you read the chapter, read the chapter. If you do this homework, you do this homework. It's real simple. So the world's changed dramatically. If you saw what Sergio said on Telegram, he alluded to it too. So how has the world changed? First of all, your professors, some of them haven't worked in the business world, in a long time. I retired in 2009. So I try to keep in contact with all my buddies, but you can lose touch pretty quickly. You also have the issue that they're covering stuff that's a little bit academic, a little bit textbooky, and it can look very different in practice when you actually do it. My investment class, what I keep telling y'all, do you want to sound like a college student or investment professional when you're interviewing? You don't want to sound like a college student. Why? Because you're not using the jargon. You're saying stuff that's, professors say. You're not saying stuff that Warren Buffett says. So you have to make that change. So how do you do that? And the way essentially the process we use in Investment Society, the students that have done really, really well. I want to write a book on the best students at UTSA finance. What did they do different than everybody else? You can read my blog. I actually have a blog on that, how to succeed in college, but to write an entire book. But one of the things they did, and I heard this a lot, is that half of what they learned in class. The other half they learned outside of class. And so when they graduated, they knew twice as much as their competition. So how do you learn half as much outside of class? You have to somehow get involved outside of class. So we've done these classes in the past, and we've had trouble getting students to show up, probably because we had too many classes. So I want to try something different this time. We'll have as many classes, but fewer sessions. And what we want to do is exactly what Raul said, is rather than us teaching you, what we're going to do is help you figure out how to teach yourself. And that's what employers are looking for, right? They want that initiative. So you can talk about it in your interview. You tell them, hey, I have this skill, and say, oh, which class you learned that in? Oh, I didn't do that in my class. I taught myself. I was showing my investment class. I was showing them my duration convexity calculator. And one of the students in the class, he taught himself Python. He went home, put that entire spreadsheet on a Python program, and I showed it in my class, right? I could show them, hey, you can just plug in numbers, pretty cool stuff. That's the kind of thing you do. So you teach yourself outside of class, using the stuff you learned in class, but also listening for the jargon. And I talk about the jargon in the investment class. Make sure you say it this way and not this way. There's a way we speak. It's not that if you say it wrong, you're wrong. It's just that if you don't say it the normal way, they look at you funny. And do you want people looking at you funny when you're interviewing? Probably not. So how do you say it? What's the correct way to say it? And so getting into these type of classes, what we're trying to do is find some technical topic that you want on your resume. So there's two things you want to try to do. Either get it on your resume or put it in your portfolio on LinkedIn. And that's the kind of classes we want to do. So what we were looking for is people to teach, and their goal is to pick a topic and then organize it. Not to teach it for a whole semester, but organize it to help students figure out how to teach themselves. So your goal is to get them started, all right? So it's not as big of a chore as we've had in the past. And if you want to do it, because teaching one of these classes also gets on your resume, which companies really love that. Leadership outside of the classroom is really important. This is an easy way to do it. But you're like, I don't know what to do. Well, that's easy. Just set up time with me and I'll show you how I would do it. And you can decide how you would do it. You're going to help students get started so they can teach themselves. So they may have to register for something. So if you want to say, hey, I want to show them how to do Bloomberg market concepts, or how do you register for it? How do you go into UTSA library? How do you click into it? How do you do it from home? How do you do it at UTSA? All those kind of tricks. Getting started after you get registered, how do you get started? How would you organize it? Some keys, like on Bloomberg Market Concepts, there's something I really recommend that you do so you get the most out of it. And I give, if the teacher wanted to do that, I give them, here's the hint, here's the tricks I discovered that really help on Bloomberg Market Concepts. Find some tutorials that are really, really good. So Capital IQ, I have my favorite tutorial for Capital IQ. It's really, really good. And you see the key there, 2 semesters ago, Anthony did Capital IQ, and all he did was he showed the YouTube video of the guy teaching. We just sat there and watched it. And I'm thinking, we could do that on our time. We don't have to be here during this time. So show you the video, show you how to use it, get into Capital IQ, and then demonstrate some stuff. So here's some cool things I learned when I went through this process. You don't have to show the entire thing, but give some examples. So Capital IQ has some incredibly powerful tools, really, really helpful in some of your classes that your professors don't need. I had a professor just today say, what was that software you were talking about? I want to use that in my class. So that's what you're trying to do. How many sessions would it be? At least 1, maybe up to 3. All right. So what kind of topics would you do? Now, these aren't ones you have to do. So 8-10 years ago, it was all about Bloomberg. So when I was in college, it was all about Excel. Now Excel's is a given. Everybody knows Excel. And then suddenly it's Bloomberg. You got to know Bloomberg. So that's it. So almost everybody knows Bloomberg now. If you get into Bloomberg, though, you'll probably still do better than most college students out there. It was funny. I spoke at a Bloomberg conference, and one of the professors was going to demonstrate how you use Bloomberg in his class. So he gets up there in front of everybody. He's on the agenda as a speaker, and he doesn't even know how to log into Bloomberg. One of the Bloomberg figure had to come over and do everything for him. So it's obviously he didn't use Bloomberg himself. And that's true with a lot of professors. Bloomberg's not their normal place they go to get data. They use other sources, but you got to use it on your job. So you need to figure out how to use it. Bloomberg also has an Excel add-in that you can learn how to use that. That's really powerful. And then Bloomberg Market Concepts, this is really wonderful because it teaches you basic economics, basic stock investing, bond investing, but you're learning Bloomberg functions while you're doing it. And there's a really cool way you can do that. It's really powerful. But then about 5 years ago, I always go out every summer and I see, I don't know, last summer I saw 130 something alums. I take them to dinner. Cost me a fortune to take 130 people to dinner, and I'm just asking them, you get this free meal. Now you got to help me out here. What are you doing on your job that we didn't talk about at UTSA? And Capital IQ started coming up constantly. And I'm like, yeah, I don't know Capital IQ. That's after my time. But I kept hearing it so much, I had to take an entire summer off and learn Capital IQs. And it's really powerful. It's very good. It's a good competitor to Bloomberg. I've converted a lot of my Bloomberg spreadsheets to Capital IQ, so you can do both. But you don't know which you're going to see, but you got to get them on your resume. And we'll show you how to get them on your resume. They'd be a great class. So there's Capital IQ, that's an online system that's pretty powerful. And then there's Capital IQ, that's an Excel add-in, which doesn't work really well here at UTSA. We got to get it fixed, but we're working on it. The other thing is pitch books. When you see pitch books, there's really 2 types. There's the investment bank version and there's the portfolio version. There's also, Sebastian was talking about, you got the M&A side versus, the investment banking side has several different formats. So here's something you don't necessarily put on your resume, but you actually create a pitch book that you can put on LinkedIn as part of your portfolio. And so how would you actually do that? So the investment bank pitch book, there's plenty of sources out there, right, to show you how to do that. But someone can teach the class and say, hey, here's how you can teach yourself how to do it. And here's how you can build your own pitch book. It also includes the Excel side. I don't know if someone did a pitch book, but investment bankers, I actually have this color-coded version of Excel. So everything means something and they set up their spreadsheets in certain ways. That's the wonderful thing about Capital IQ is if you have Capital IQ, they have a bunch of examples of those spreadsheets that you can just bring in and look at. Then the portfolio side, if you're an investment manager, what kind of pitch book do you show to show your performance, what you're investing in, your top 10 holdings, your alpha, your tracking error, those kind of things. And the cool thing there is that Bloomberg has a function that shows you how to do that. So we could show you how to do the Bloomberg portfolio function. Excel obviously is important, still important. What are those key functions? What are the functions they expect you to know in an interview? We've had someone talk about a fact exam prep, so we certainly do that. I was just talking to someone who's thinking about taking part 1 of the CFA exam, and a lot of people don't know they can do that as college students, and we have a scholarship. So I told him, hey, why don't you, he's in here, so I won't point him out, but so he might do it. I'm not going to force him to, but he might do that. But if he does that, he can certainly, as he's learning, how do you register? What are the topics? How do you study? What kind of materials do you get? How much time is it going to take? Getting part 1 of the CFA exam on your resume as a graduating college student, it doesn't open doors, it blows the doors down. I mean, it is an amazing advantage. A lot of firms respect the CFA more than they do college degrees just because they know what the CFA exam is. Colleges are all over the place. Some are hard, some are easy. The CFA exam, you pass part 1 of that, but it may take you 100, 200 hours of studying. So you got to make sure you have the time to do that. So that would be a cool class. Stock screening models in Bloomberg. Capital IQ also has a model. Tableau, Wayland taught Tableau, 2 semesters ago. Our Power BI, that would be a cool thing to do. Machine learning and AI, we could certainly have a class on that. There's some great podcasts on machine learning and AI that someone could go out and research and give you some good ideas there. Company analysis using Bloomberg, Capital IQ. Wealth management, I just did a whole YouTube channel on health management. So if you want to get my biases, you can go watch that, or just basic coding. I'm not saying those are all of them, but you've got to learn this stuff anyway. What better way to learn it than to organize it and then teach a class? So you get teaching a class on your resume and you get the thing you need anyway. You kill 2 birds with 1 stone, get 2 things on your resume, and you know, you're putting yourself above the competition just that much further along. So questions on this? I don't know if I have all the topics there.
So you want people from this room
From this room, right?
to teach a class on those various topics?
Pick one. So
Pick one.
let's say someone says, I'm going to do Bloomberg market concepts. So if they want to sit down with me, we'll say, okay, here's how you register through the library. Here's what it looks like when you get in. Here's the different topics. This is how long they take. How should you do it? And I can give them some ideas on that. What should you be doing while you're watching? And there's certain things you really want to do, because you go through Bloomberg market concepts. It might take you 10 hours to do it. And you get to the end, you go, oh, I wish I'd taken notes on this part. And we'll give you those hints in advance so you can get the max value out of it. That's what we're asking you to do. How many sessions does that take? Might take 1, might take 2, might take 3, but it shouldn't take 8 or 9 or 10. And my hope is we might have 4 of these for the first 3 or 4 weeks of the semester. Then we add 4 more after that. You know, so a session ends and then we teach. So maybe we do Bloomberg for 3 weeks and then we do Capital IQ and we show you how to teach yourself. All right, y'all see how that works? So it's a little different approach. So we probably have more classes, but they don't last as long. And you don't have the problem I think we had last semester. We had like 15 classes a week and we don't have enough students to fill up 15 classes. So now we'll have 3 or 4 classes. You can come see those and then they'll end after 3 sessions and we'll start some new ones. So that's the thought. All right. Other questions?
See those as in they're going to be recorded?
We might on YouTube. Actually, there's if you teach a class, you can win a scholarship. And the way we do the scholarship is the EMBA council, they pick that. I would love to be able to show them, you know, the 3 kind of, there's 3 that are recommended and they could watch videos of those 3 and just see. So I have this idea, it hasn't gone too far. The only thing we have out there right now is the fact exam review. But I have a YouTube playlist called Investment Society University. I'd love to fill that up with videos of y'all teaching classes. The challenge we have is this person comes in to teach and then somebody asks the questions, we get distracted. We got their right ear for like 10 minutes and, you know, it's just not a great video. So I'd want us to get better at making the video work really well, but also have a class. It's hard to do a good YouTube video when you're also got people in the room. So it's a little tough, but we can get that to work. It'd be wonderful. I'd love to get some great videos out there on our university and have people actually coming to us to learn how to do all this stuff. Like the the professor that didn't know how to do Bloomberg, his students could come to our university and figure it out from us and not have to worry about a professor that doesn't know how to do that. Other questions? Do we have any interested people yet?
Yeah,
I see some.
I sent you a message. Over
Yeah.
email, or I texted you and then you told me to email you. Is there?
Yeah.
Okay.
I can't remember if I got your email, so I have to look in my spam, but. Well, we're gonna take 2 weeks to get a schedule down. So what you need to decide is how many sessions you need. Well, kind of organize. I need my help to help you organize. I certainly have ideas of all of these things. Help you organize and then figure out how many sessions. Do you need one? Do you need two? Or do you three? I don't want us to go much past three. So 3 sessions. And then you have to decide when in the semester you want to do it. Say, hey, I want to do this, but I want to start in October. I want to do this, do it early in the semester before the semester gets heavy. So I want to start September. So we'll probably start in a couple of weeks. Other questions? I saw a lot of hands going up. If we have too many people, you could team up and 2 of y'all do one and just break up the work a little more. And that could get you a better video because one can be working with the classes. We also need students. So we need people to show up for the classes as well. So, all right, we'll work it out. So that's it. I don't know where I am on time, but I think I'm doing pretty well. All right, that's it for me.
Cool, let's just get some updates in. You guys did not scan the QR code for our market watch competition. Do that. If you guys get first, second, or third, you guys win a prize. So try your best at investing. It's all fake money. So if you lose money, you're not losing money in real life, so you're good.
Not margin. What do I get margin called?
I don't think we allowed margin, did we?
I'm not sure. I'd have to go back into the site.
Yeah, there's 10 grand worth of margin.
Okay.
Okay.
Well, you get margin call, I think, once you go, or once you lose that 10 grand. Which,
So then I get margin call then?
yeah, which, I mean, losing 10 grand is
Oh,
probably.
yeah.
Cool. All right. So we do have our society merch today. We got our t-shirts. So if you guys want to buy some t-shirts, Juan Carlos is the man to go find. We don't have any polos. We ran out of them, but we're looking to reorder those soon. So again, we mentioned this in the first meeting. These are our membership requirements. It's kind of important to come to these, and especially if you want to win a giveaway, if you meet all these requirements, you're going to get put into a raffle to win potentially $150. So as well, one of those is paying your dues, $25 for the semester or $40 for 2 semesters, and you can pay that with Juan Carlos as well. So this is our calendar. We have Andretti's Bowling social event, which is on Friday at 6 p.m. And then next week, we're going to be hosting 2 analysts from Valero, one a fuel trader, another one a business analyst. So that's I'll talk more on that right now, but the next 2 meetings are at 7:45 as well, and then we have a study night. So the Valero, the business analyst, he is a past alumni of the Investment Society. He's going to talk a little bit about his background and what he does, and then he's going to jump into possible opportunities at Valero for a summer internship. And then we have the fuel trader, which is going to talk about a very high level kind of lecture of what he does on a day-to-day and what is exactly fuel trading. And fuel trading is, I think it's pretty interesting. So if you guys are interested in that kind of stuff, I would recommend come network with them, meet them, connect with them on LinkedIn afterwards, and just, try to ask as much questions as possible. So that's going to be a great session. Then Andretti's Bowling. So if you guys, this is the RSVP that we had last week. If you guys did not RSVP and you guys want to go, scan that QR code and RSVP. Again, it's Friday at 6 p.m. It's going to be an hour of just networking, and then an hour of bowling. So we got, I think, 6 or 7 lanes. 7 lanes. So come on out. And then we're planning to do a resume and LinkedIn workshop. I want to see who's interested in this. There's some times on there. I think Thursday at 3 o'clock, Thursday at 5 o'clock, and then Friday at 3 o'clock. So just pick the time which you guys would be most available for, which one you want to go to. kind of give us an idea of what day, what time works best for everyone that's interested. Cool, and that's it. I don't know how many of you guys, before we end, how many of you guys have seen our website or knew we had a website? Okay, not many of you. Okay, so I just want to show you our website real quick. Okay. So this is our website. You know, we have everything here. You can find our events here. If you click on this, you can figure out, you know, when our events are. They're not all on here, but we have the bowling social night. We have the address for that there, and we have some events coming up. So Valero, and we're hosting the CEO of Santikos to talk about an acquisition that they recently made. And we have our elections and fall ball dates, but there are more events coming up, and we'll put that up there as well. So you guys can go to our website and look there as well. If you don't find it on our Instagram. Another thing is that on our footer, you can find our store, and you can also buy our t-shirt from there. If you want it shipped to you, there's a shipping cost, but if you want it just to come pick it up, there's no cost for that. And you can also pay for your dues here as well. So just wanted to show you guys that instead of, there's a huge line here, you guys can just do it online. Cool. Well, that's it for today, guys. I hope if you guys have any questions for our presenters, come on down, network, ask them questions.